focus. Ideate, innovate, enable. Presented by Bank of America, the Leadership Series, Transforming India, in association with CNBC-TV18.
Hello and welcome to the Leadership Series, Transforming India, presented by Bank of America in association with CNBC-TV18. Now, in this series, we get the think tank to decode India's growth journey in Amrit Kal. And today, I have on my panel luminaries who will share the insights on transitioning to sustainability with a clear focus on how green energy is picking up pace as the fuel of the future. Let me welcome on the show Dr. Praveer Sinha from Tata Power, Ankur Thadani of TPG, and Gaurav Singhal of Bank of America. Gentlemen, so good to have you on CNBC TV18. Now, Dr. Sinha, we have come a long way when it comes to renewable energy. But in this journey towards greenification, how do you see India really taking strides, especially in the time of Amrit Kal, when the development is going to be on a fast track and the requirement of energy will be critical and immense?
So, first of all, thank you for having me on the show,
My
Nisha.
pleasure, sir.
Let me try to put this in the perspective.
Yes.
India today has about 430 gigawatt of installed capacity. And we have very ambitious plans to double this in next 7 to 8 years. So 2030, we should have nearly 1,000 gigawatt.
Yes.
And that means there has to be huge capacity addition. Now, what we have seen in the last few years, especially in last 7 to 8 years, is that renewable capacity additions are taking place. And this is primarily because there is now pressure globally that we need to move towards clean energy and we need to transition towards that. And also the cost of the green energy has come down.
Yes.
And though today in our energy mix, we have just about 15% of clean energy in our total mix.
Yes.
But going forward by 2030, we expect it to be something around 50%, maybe 47 to 50%. And that means that all new capacity additions will happen in the clean energy. And today we are not talking of clean energy just as solar or wind, but complex clean energy solutions, which is solar, wind, and storage, and different types of storage, so that you make this intermittent power, firm power for 24/7 or peaking purpose. So I think there is a great opportunity for India. More so because our per capita consumption still continues to be one of the lowest, much lower than the world average of 3,000 units. We are still around 1,200. We are much lower than other developing countries and, of course, much lower than many of the developed countries. So we have a lot of space to cover in next few years, and you will see a lot of energy transitioning work to take place in the coming decade.
That's right. The government support is also there. There is a policy framework, and all the big, deep-pocketed, big conglomerates like yourself, even Ambani's and Adani's, all put together, have really laid out huge expansion plans when it comes to this particular space. And to your point, a very big number from 15% to jump to 50%, that's a long journey. Ankur Thadani, the investor community, how do you view this particular space growing and the opportunity that India has?
Sure, Nisha. Firstly, thank you so much for having me on the show. I would take with what Dr. Praveer said and put a little bit of global context to this, right? As private equity investors, we are students of industry. We spend time thinking about industry patterns and how they evolve. We think of this as a generational challenge and opportunity as two sides of the coin in front of us. This is no different from when the world industrialized or when the world globalized, right? That's a kind of generational challenge that we're looking at. Now, if you look at it from the next 10 years or 15 years perspective, the amount of capital required for this to happen, we're talking very large sums of money, right? They run into trillions of dollars. So the key question for us is how to solve for that capital as the world thinks about sort of reindustrializing itself in the new energy architecture. Also, if you think about to what Dr. Praveer said, globally, every country, every geography is thinking about the energy trilemma. What do I mean by that? It is energy affordability, energy sustainability, energy security, right? For India, These three are equally important, but what's as important, if not more, is energy growth. So India thinks about not just rewiring the current energy architecture, but also additional energy that's going to come for the next 10, 15 years from demand. What will drive that? And if that has to be from renewable energy, then it has to be fundamentally economically viable, number one. Number two, it has to have all the enabling architecture of regulatory support. And number three, there has to be capital to execute to that ambition and to that vision. So we see all of this playing out for the next 10, 15, 20 years, like any sort of global generational trend that we've seen over the last many, many decades in humanity.
Right. So all coming together, and you made a lot of points which we can deep dive further into as well. But affordability is a big thing in technological advancement, which has brought in that adoption for India. Gaurav Singhal is sitting right there and joining us from New York. Now, Gaurav, electrification on the whole, that has become a big theme and especially took leapfrog around the COVID time. So it's become a very big opportunity. What are you seeing from your vantage point of engaging with industry leaders in this particular space in the US and in India? Where are we when it comes to the developed countries and comparison to us?
Yeah, thanks for having me on the show, Nisha. I think all relevant points made by folks here. See, India is a very exciting market. Nobody in the globe, you have such a large economy growing at a healthy 7-8%, and the per capita power consumption is 10th of the US, so there's a lot of headroom to grow there. And the government policies in general we find pretty conducive. The one point that I'll make, which is pretty unique to India, the energy transition theme is not a pull product. Sorry, it's a pull product and not a push product. What that means is that unlike US, India doesn't have any reserves of gas, right? So renewables is now the cheapest form of electricity, and the demand is driven by lower costs and not just decarbonization goals or tax incentives. I think if I talk a little broader from energy transition perspective, India spent close to $30 billion in calendar year 23. US, that number was $300 billion, right? So almost 10 times. But a big chunk of that went towards electric transportation. Just the electrification itself, India is spending close to $20 billion in putting up renewable capacity, and that needs to go on for next 10 years if India has to achieve the 450 gigawatt 2030 renewable energy target. I think the next phase of growth, as we see, is not just about putting more and more renewable power. That, of course, will happen. But essentially, the theme of decarbonization, digitization, and democratization of energy needs to happen, which is where the world is moving, and India is kind of taking lead in that.
Right, world is moving towards that, and India is taking a lead in that. And Dr. Sinha, your company, or one of those companies which has been a flag bearer in taking the mantle across for the renewable thrust in the country. What is the vision, and how will you meaningfully contribute in the future of India when it comes to the transition?
So when we talk of transition, it's not just putting solar plants or wind plants or hydro plants, but it's about how do you give reliable power supply. And that's the first core uh, element that needs to be satisfied, that how do we make it 24/7. And the challenge with renewable is that they are only for certain hours in a day. Solar is during daytime, wind is during evening time. And what do you do when you don't have, and how do you bring storage solutions? And how do you make it also when you bring storage solutions, whether it is the battery storage or the pump storage, how do you ensure that it is affordable? Because energy is something which is used by everyone in urban areas as well as in rural areas, by industries, commercial and residential consumers. So I think we need to look at it in totality, and then of course today we can use this for mobility purpose. So I think what will be important is how do we make abundant and energy affordable for everyone. The second aspect is that when you talk of energy, we also need to ensure that there is energy security. We cannot have a scenario whereby we, for whatever reason, if there is no sunshine or there is no wind speed, we do not have a backup. And that's where I think the resilience of supply and the security of supply has to be ensured. And I think the country has to move in a direction where all guns needs to fire. It is not just either or, it is and with everything. And so renewable means that it is solar, wind, you have the storage, which is the battery and pump storage, you have the hydropower plants. India, unfortunately, does not have gas, but we definitely can look at the nuclear power as a backup and to bring resilience, especially the small modular reactors that can happen. And then, of course, we need to have the right ecosystem to manufacture most of these things within the country. So a lot of moving parts are there, and we need to really work at a very fast pace if we have to catch up with the developed countries in terms of providing affordable power to everyone in the country.
So you rightly mentioned it has to be there has to be surety, there has to be sustainability of pricing, and I would say storage as well. So all 3 points that you mentioned are very, very critical for its journey. We'll talk more about that, the exit opportunities, as well as what we are looking at when we crystal gaze into the transition of the energy in India. Stay tuned to the show.
Presented by Bank of America, the Leadership Series, Transforming India, in association with CNBC-TV18. Presented by Bank of America, the Leadership Series, Transforming India, in association with CNBC-TV18.
Welcome back, and we are discussing transitioning to sustainability. Now, Ankur, we were talking about the various technological shifts that's required. There is intent. Deep-pocketed companies are already showing huge amount of interest, but there have been several climate funds as well as private equity players like yourself who have focused on this. How do you see the entire landscape of financing this? And private equity is not the only one. So how do you see, are there certain gaps that still need to be filled?
Oh, absolutely, Nisha. I think if you think about the entire financing landscape for energy transition, right? Firstly, what do investors like us look for, right? I would say there are three things. There's execution that the businesses have demonstrated. There's financial sustainability and returns. And then there's an enabling environment. And that enabling environment is not necessarily government subsidies, but a favorable regulatory policy, right? And a consistent regulatory policy. So if all of this is in place, you will see a lot of capital come to the sector. Now, if you think about the entire capital landscape, you have debt, you have equity, right? And within equity, you have everything going from private to public markets. Within private, you have venture, growth, buyouts, right? So the entire ecosystem has to develop as these businesses scale up, right? You need innovation funds. You need early stage venture funds that could fund frugal innovation for the country on the climate side. So that's required. You need growth capital, which investors like us can provide. And then you need public markets which start becoming sophisticated and evaluate climate opportunities when they come to public markets. Think about how many public companies are there in India that are focused towards new energy transition. And by the way, think about how many of them came in the last 2 or 3 years, right? A big share of them have just gone public in the last 2 or 3 years. So we see this happening over time, where every aspect of that landscape will evolve and mature. And I think I would be remiss if I don't mention debt here, because if you think about any project that even Dr. Praveer is thinking about, debt plays a very, very key role. And the entire debt landscape has to evolve, right? You need a lot of debt capital to be available in this market, which could be banks, bonds, domestic, global bonds, which is very, very nascent today. And without those markets evolving, you cannot solve for all the energy transition goals that we're talking.
So very, very important point made here, because capital intensive sectors, Dr. Sinha, have always struggled with long-term financing. And way back, you'll remember that UMPP was launched by the government to give thrust to our energy requirements. And a lot of companies have capitalized on that particular thing also. But what is in it for the renewable sector to really look at? Let me ask Gaurav also on this. Gaurav, when it comes to corporate finance and financing this particular sector, what are the key trends that you're seeing that are present in India and that needs to also come to India?
No, I think that's a very relevant point to discuss. Now, as a country, we need about $30 to $40 billion investment each year. If India were to realize its net zero ambitions for the next several years. Now, if we look at just the renewable sector alone, almost 80 to 85% of the capital stack gets funded through debt. I want to estimate that almost 90% plus of it is currently getting funded by domestic banks and a couple of government sponsored entities like PFC and REC. Now, that's not necessarily a sustainable model. US dollar bonds emerged as a decent source of capital for the sector, but the outstanding dollar bond is about $10 billion today. And in the last year or so, there hasn't been much issuances because of the overall interest rate volatility. So if I think about it from my US lens, I see that there are other sources like domestic bonds, pension capital, insurance capital, private credit funds, structured credit hedge funds. All of these are important sources of incremental capital. I think India has tried to make some moves in innovative products like InvITs, and I know the SEBI chairman recently talked about InvITs and municipal bonds. So all of that will need to come in if the long-term financing has to be made available for this sector. That's on the debt side. I think on the equity side, Ankur talked about it. If you think about it, not even one single pure play renewable energy company has listed in the country. So that needs to change. So a lot of new sources of capital will need to emerge if India has to realize its ambitions of net zero.
All right, so lots more to happen there. But Dr. Sinha, from the corporate finance angle, what are the key challenges? And otherwise, also, what are the key challenges you see in the growth potential for this sector?
So I think one of the biggest challenge that we are seeing in this sector is how do you get capital at an affordable rate?
Yes.
And while there has been a lot of discussion that climate funds will come, they need to really start demonstrating in terms of what sort of special conditions, long-term financing, and also what sort of the interest spread that they would like to have. We have seen very little of it till now, but I think with more and more funding support coming from leveraged entities, even multilaterals, we should be able to see much better pickup in future. So I think the corporate India is definitely looking for a lot of funding support. Apart from the multilaterals, the private and the government bonds issues should happen and should be much more simpler to implement and use that money. So a lot of changes are expected, and once those happen, then you would see that the pace at which the implementation of many of these projects will get enhanced.
That's right. And as Gaurav was mentioning, InvITs are also, great products which have come into vogue now in the last few years. And they have really solved for the corporate finance issues of infrastructure, capital intensive sectors, and including renewables as well. But Ankur, there has to be an exit mechanism as well, because investors first look at their returns and exit mechanism before investing. How do you see that ecosystem in India, and where does it need to develop?
Sure. Look, I think it's a natural evolution of the ecosystem, right? One of the core exit avenues that all investors look at are public markets. And as Gaurav was mentioning, right, there is still no single pure play new energy company that's listed in India. I think that's a big ecosystem that needs to unlock, which will give investors the confidence that there is a viable exit alternative on the public side. On the private markets, I think things are changing. You are now seeing a lot of focus on energy transition from probably every global private equity fund, and so for domestic funds, and then that would become a vibrant market for transactions to happen. So both private and public have to evolve. I suspect private is evolving faster than public here, but that should catch up quite quickly.
All right. So things are still at a formative stage. Final comments, Dr. Sinha, your vision, how do you see this space growing? You gave many points on what is coming in the future, but India and its journey for the transition.
So I think India has started well, but it needs to consolidate, and there would be a consolidation also amongst the players while today you have more than 30 players in the market, many of them are very suboptimal, and what you would see is that in next 5 years there would be consolidation amongst the players. That will also give a lot of confidence to the investors, both private and public investors, that there are large players who will be there for a long period of time and not for short-term investment opportunities. The second big thing that will happen is the technology, where there will be huge amount of disruptions, and many of the technologies that today we are looking, especially Ankur also mentioned about the battery technologies, the new chemistries, the new technologies in nuclear reactors. So many of these disruptions will happen. Many of the startups who are working in this space, we expect that in this decade they will be able to come up with very unique solutions, and we will definitely be able to move the needle as far as the energy transition is concerned.
So there you go, the exit opportunity by way of consolidation by bigger companies like Tata Power can be definitely on the table for you. Ankur, any final words?
Yeah, look, as I started off, right, this is a generational challenge and opportunity. Let me probably end with an optimistic and hopeful note here. We spent a lot of time talking about electricity, power consumption. There's a whole entire world of CNI, the industry of India, right? And today, India is a net energy importer, right? India actually has the opportunity to become a net energy exporter. And that is because of its resource abundancy, because of its talent pool, both skills and cost benefit, right? So that's a massive pivot for India to make, to become from an importer to an exporter of energy. And what does it take for India to get that? You know, it's not a simple answer. We need a whole new show for that. But I do see that opportunity for India to take benefit of.
The whole ecosystem is going to develop and gear up for that, Ankur. And that's the vision that we are working with for Amrit Kal as we transition in terms of energy towards sustainability. Thank you so much, Dr. Praveer Sinha, for joining us, Ankur Thadani, for your great thoughts, and also joining us, Gaurav Singhal from New York. Thank you so much, all of you, for all your insights. With that, it's a wrap on this edition of the transformation journey that we have on Leadership Series. Thanks so much, and keep it with CNBC TV18.
Presented by Bank of America, the Leadership Series, Transforming India, in association with CNBC-TV18.
Focus, ideate, innovate, enable.